Guten Tag und herzlich willkommen bei 101, dem Expertengespräch von Mein Geld TV in Mannheim auf dem Fondskongress. Ich begrüße heute ganz herzlich Herrn Tarek Saber. Er ist Portfolio Manager bei NN Investment Partner und based in London. Hello Tarek.
Hello.
Tarek, the year 2017 is going to be a difficult year because of the elections in Germany, in Netherlands, and of course in Italy, and Trump is a problem as well. So do you think that the convertible bond is an option for investors?
Yes, I do. I think convertible bonds should definitely form part of an investor's portfolio. We have massive uncertainty coming in. We've had a massive bond rally that's gone on literally since the 80s. People are betting on equities, but we're not sure. So the idea of having a split between bonds and equities and not knowing how much to put in each, convertible bonds is definitely a very good solution, and I think you should have between 3 and 10% in your portfolio.
Tarek, what is the role of credit quality in the convertible bonds?
Credit quality in convertible bonds is incredibly important because that's the part that gives you capital preservation. Because you have two parts. You have one part which is the optionality, which means you participate in the equity upside. And at the same time, if that doesn't come in, and let's say we have a bear market in equities, then the credit quality is what's going to give you your money back at the end of the term.
So Tarek, the last question. What is special about your convertible bond strategy?
Our convertible bond strategy has pretty much 4 steps to it. The first one is convexity, and what we mean by convexity is we want equity participation per unit of risk. And that really means that if you own the convert and the underlying equity performs, you're going to get a decent return. The second thing that's important with us is to get capital preservation. Now, with capital preservation, that's what we talked about earlier on. It's about the credit quality. If we're wrong in our prediction of the underlying equity, are you going to get your money back? So that's very important. The third thing is, what do we think are going to be the drivers of the underlying equity? And what we use themes rather than sectors, because we see those as dynamic drivers of the equity's upside. Where is it going to come from? And the fourth thing is our risk control and portfolio management that we actually do. And the other thing that I think is very important in our thinking is that we buy names that we want to own rather than just follow an index. So we have a select fund. When other funds might have more names in the fund, but in order to reduce risk, we spread our risk by using more themes. So we have 33 names in the fund across 18 themes, and we've had a very good performance. We've outperformed our index by 300 basis points over nearly the last 5 years.
Thank you very much, Tarek.
Pleasure.